Hello everyone and welcome to today's video. So basically, before we begin, if you can please read the disclaimer. Understand everything shown in this video is for entertainment purposes only, and everything shown in this video is just my opinion. Please understand I'm not a financial advisor, so just pause and read the disclaimer once you're done and press play. So let's begin. Hello everyone, welcome to today's video on Bitcoin. So, just going through first, this was our original channel. Currently, we've broken out of the channel. And what I've done is gone through, the various different fibs that I would normally pull. And I've also created an estimated fib as well. Now, I'm going to be looking for both bullish and bearish scenarios. But one thing I will show, as previously, what you can see, we have changed our market structure. And what I mean by that is, if you look at this, we broke this to a bearish structure. So literally this low being lost. We can see we had this dump occur, which was based on similar targets from, if you've seen my previous YouTube video, you will see the targets that I had on there for this potential move down. Now, I did have scenarios for the move up and side consolidation. But the move for this pull down played out very well. Now, in this video, I'm going to look at where we're expecting to maybe go, what we can see, and how people may be. I know people always like to be bullish or just bearish. I like to look at multiple different scenarios and try to predict where the movements may or could go, and literally take it from there. So in this particular one, what we're going to do, I've left this channel on just in case, as we have broken out of it. What I normally expect is a back test of the channel. So it is entirely possible we may get that. So before looking at that sort of back test, what I want to do is look at different fibs I have. So currently, if this is the bottom, then I would have a fib from the high to the low. And what this would show is currently, if this is the low, we're sitting currently at just above the 236 level. So that would be one of my fibs. Another one of my fibs that I would look at would be a trend-based fib. And this trend-based fib is based from this low over here to the high, and if that's the potential low. And again, looking at it from that sort of point of view, we're currently just sitting above the golden pocket, and we have obviously tested the 0.5 already, and we have obviously tested all the way bottom down to this liquidity area as well. So we've got these two fibs. Now, one of the things I'm looking at on this two fibs would be looking for confluences. So let's move on to the third fib, and this third fib is based on this low to the all-time high. And this comes down to that we're currently sitting below the 618, under the 0.66. This is after the drop. So again, I'm going to be looking for certain confluences. Now, I can see some confluences already. So one of the confluences I see is potential for the price to, retrace up. And where could I see the price to retrace up? And this is, again, normal part of structure for price to move. So one of the areas that I'm looking at is this point over here. I can see this is a good area for liquidity. We have tested this area multiple times. And this was, the move down. And then again, we've had the multiple move down from that area. So there is the potential for price to, come back up and test this liquidity again, right? Now, what I'm looking for in this sort of area, see if there's any sort of confluence here. There is also liquidity all the way up here. However, I would need to see confluence in this area as well. Okay. The other areas we've already tested, as previously mentioned, was this liquidity zone down here. So what we're looking at is now to see where else price has the potential to go. So I'm just marking out other liquidity points of interest for me. Okay. Now this is based on order blocks, but I won't go into detail on that. And this is just me quickly marking these levels up. I'm not marking them out as typical support and resistance because I don't use them. I don't believe in them. Okay, now as I have these marked up, so what I want to look at, the color is irrelevant, just so you know. What I want to look at is load the 3 different fibs up to see where I could have potential confluence based on liquidity. Okay, so we have the first fib, and we can see the area I'm looking at here is obviously this point over here, which is the 618 area from this high to the low. So again, we're looking at the area of interest now becomes approximately around sort of, this sort of area. So this block. Let me draw this out. So approximately something like this. Okay. Then the other thing I want to look at is there any other confluence there? So let's hide this 618 fib and go to the trend based. And then we also have the 1618 nearby it, also with the 1.141. So again, nice looking area, I would say, for liquidity. Yeah. And now what I also want to do, I want to look further down if there's any other confluences. So we load the other fib up, and we can see that the 382 level and 886 level is good here in this particular point, but I'm not seeing, the liquidity zones that I want to look at. Okay, now let's move on to the third trend-based fib, which is from this low to the high. The other thing I can see over here is there's also a 382 level very nearby also. So I would say this would be a good area for a potential pullback. Okay, so what I'm looking for is something, maybe if price is able to, break back up the 618, a potential retest of this area would be good before maybe trying to move back down. I don't know where it's going to go, so I'm going to try to estimate where the low may be. And for this, what I'm going to do is, not everybody usually does this, but I like doing it because it's something that I do. And what I'm going to do is I'm going to make an estimated fib based on the confluences of the other fibs that I've seen. So what we're looking at is we have this estimated fib. This is based on this high, potentially this low, where in this case ends up being a 618 test, to this particular high. This particular high is based on a trend-based fib. Sorry, not a trend-based fib, but the first fib retracement from the high to the low, touching the 618 area. And I've chosen sort of the middle-ish part. Because it is estimated, there is no perfect science to it. So based on that, what I would be looking at is, again, this could act as potential support, number one. If it does break through, what you're also looking at is targets of, not many people are going to like this, maybe the 0.1 or down to the 1.127, and worst case, even 1618. Again, I'm not saying price is going to go there. It's something that I would always look at. This is if a bear market was to happen. Now, if it doesn't occur, what the local structure, what we can see is we can, see a bullish scenario where price bounces off this estimated 382 level. And if I look at this, I can look at the non-estimated fibs. So we're talking in potentially maybe the 236 area again. And that could be, more viable since it is based on that current fib. And that's probably testing this area down here where we're currently holding. Now, if we look at this from a lower time frame point of view, such as the 4 hour, you can see there is liquidity there. And potentially, you could have that accumulation phase occurring before a potential push up to this point here, where we could then distribute and maybe make another potential move down. And if that does occur, that would be great. I'm not looking at a channel at the moment, simply because of the higher sort of time frame since we've broken out of this channel. What I would want to determine to get another more precise point to get a nicer channel, and if this was an area where price could retest up to, then then I would look for a channel maybe potentially moving something along this sort of line, and that would be again based on using the line tool and looking at it from that sort of point. Are we going to have something approximate like this? The other way you could look at it is you can take these 2 points from this low over here to the low up there to that high, and then obviously if you do accept this, then we're looking at this maybe as a potential swing failure. Again, this is all estimated. Understand it's not something that will happen 100%, but this is all based on probabilities, and that's the sort of channel I'd look at. Now, in the ideal scenario, if we break back up and we hold the original channel, yes, we have the potential to create, higher highs and then move back up to test the bullish scenario. But if we don't, and the pattern of the market structure becomes bearish, then, we must be, ready for it. As much as everybody likes the bull market, we have to understand that markets move up, move sideways, and come down again. And I'm not stating it's going to come all the way down to the very bottom again, but be prepared. You don't want to be in a position where you've bought right at the top and you assume it's going to go up to 100, 200k for only, to find out that the market has turned over and you're in a bear market and now you're stuck. And that is similar to people who were stuck potentially, previously in the previous bull market where, price was exceeding 19 to 20 odd K. And then they waited such a long period of time to actually break even. And you don't want to be that sort of trader. So you have to plan for it to understand if it does come down, where are the potential targets. So, you can't act like a retail trader. You have to think like an institutional or / whale trader to understand where price could go and what will be more beneficial to institutions and whales. So as much as a retail trader wanting price to go up, because, it can potentially make you more money, that may not be something what the whales and institutions want, because they want to accumulate more Bitcoin for longer term, and this is entirely possible. Nobody, previously thought that price of Bitcoin, once it hits 65 odd K, will come back down to approximately, 28K. And how many people got caught out there? So you don't want to be caught out in the same sort of scenario again. Be prepared for it. Trade with your stop loss and have good risk management. So based on this, if price comes up and we are at this sort of level, for me, we would need to break this level ideally, yeah? And if we break this level to potentially, maybe close near the 786 and then retrace down, for me that becomes bullish, and then this down sloping channel, which is based on this estimate, becomes invalidated. So you want to look at both setups. Now, in this sort of case, there's nothing stopping price from dropping more, and it could do so, and that's entirely possible. Another thing I want to show everyone is what many people may have not, seen before, and that is to understand why did price stop up here. And for that, what we want to do is we want to look at trend-based fibs. So we're not looking at this current one. We're going to start off with this one. So this is from the bottom, which is the COVID dump, to the all-time high, which we had earlier on in April. Then the dump down at 28K, so from 6, and which gave us a target of a nice 66 to 618, a golden pocket. And then we rejected this to come back down to test the 236. And based on this, we're currently just sitting just below the 382 level. Now, you can't, I'm not naturally is going to assume there's nothing there, but we have local fib levels here, like I showed you before. So, if we are going to break up, I will see this area as big resistance, and we have to then break this. And if we are looking at things like a potential retest for the third time, and if this does break up, there is a potential it can break up. Why am I saying this? We've tested once here and we've tested again here, and just literally on the 618 here. So the next time we could potentially break up. And if we do break up, what are my targets? My targets at that point for the bullish side will be 1.127, 1618. But this is if, and this is the big if, we break up. Now, if we don't, I have targets a lot further down, all the way down to, around 10 to 13k. And that may seem crazy to some people, but for a retracement up to that level is entirely possible. And if we take it from this all-time high, a potential drop down to maybe 80%, that takes us to 13k. 85% takes us to 10k. So that is still in confluence with, the long-term sort of fib, the trend-based fibs that I have drawn up. And this is not, if I look at, say, the estimated fib, that just goes below, close to the 1618. So at 85%. So I'm not saying it's going to happen, but I'm prepared for it. And in this sort of case, I'd rather be prepared for the bear market or the continuation of the bull market in both sort of scenarios. And I hope that you are too. Now, if I go to the indicator side of things, where we're looking at the Titan RG, let's hide everything else. And in this sort of case, what I want to look at is how it's doing. So if I look on the weekly, it doesn't look good. The Titan RG, the sales have now increased and are above the number of buys. So this is what usually happens at this sort of point. And here, normally get a bigger drop. And if this does occur, it only tends to validate my opinion of price potentially coming down. Now, I'm not expecting price to instantly just drop like this. But again, you could get a small push up, creating a sort of wick like this, and then a push back down. So, all I will say to everyone is be careful. Use your, if you are going to trade the trend, and trade with stops, and make sure that everything that you do not do it out of, missing out on a move. So understand that all other assets currently, on the crypto space will move based on how Bitcoin does. And if Bitcoin pumps, they will potentially move up. And if Bitcoin crashes, expect them to drop significantly. So I have personally, many people may think I'm mad, but I've cashed out a lot of my BTC positions and alt positions, and I converted them into USDT. And if price moves up, don't really care too much. Why? Because I've still banked my profits, and if price drops, I'm then able to buy back in a lot lower. Anyway, I hope this has been useful, and thank you again for watching. Please subscribe and share and support the channel by liking the videos. And if you are thinking of trading, support us by also using our Bybit affiliate link and join our Discord. It's free. And you're more than happy to reach out to myself via Discord also. Thank you again, and I'll see you in the next one. Bye-bye. So thank you again for watching the video. And the disclaimer one last time, please understand everything that was shown in this video is not financial advice. It's for entertainment purposes only, and it's just my opinion. Okay, thank you again. See you in the next one. Bye bye.